with us this evening. Kesquakanak from now Fiserv, used to be First Data, but they've changed their name. And Chris Rogers from Split Payments. And they'll be the three people who are joining me to discuss the subject. So online and in-app payments are growing at very high rates in both Australia and Sweden and globally. Those activities are likely to further benefit from the wider deployment of both APIs and open banking, an area that we're going to explore in this discussion. Areas of interest include how open banking and APIs can generate the development of new product offerings and how the use of APIs may impact the shape of future payments infrastructure. So Joachim, thank you very much for joining us all the way from Sweden. And perhaps we might start with an explanation of what your company, Minna Technology, is delivering on the back of open banking and APIs and how your platform is helping consumers. Oh, I think you're on mute. You on mute?
Perhaps your interpretive dance.
Maybe it only goes through the other one.
So maybe you might have to unmute from there.
Sorry, we're just going to unmute you at this end. Okay.
Maybe I'll
You have to mute there.
Where's your phone, John?
Oh, my fault. Oh, it's my fault.
Mute this, maybe.
Yeah, maybe mute this one.
Mute that, and then, yeah.
Yeah.
Now come open.
If you made that one, then he won't be able to hear that.
We might just pop you out and back in.
Can you hear me?
Yeah.
We got you.
1, 2, 3.
Far,
He can't hear us now.
far away, Joachim.
All the way to Australia.
Yeah.
All right, can you hear me now?
Yeah.
Yes?
Perfect. So first of all, thank you for the opportunity. I'm very jealous of the temperature you have. So it's -degrees and ice everywhere. But to start off with, so I've been within fintech for the past 6 years. So long before open banking was even a thing, even in Europe. And the major shift that I've seen over the past 6 years is that banks are actually moving from competition towards collaboration. So as a consequence of open banking, we can see two clear teams right now, that you have fintechs trying to compete with the bank to steal their customers and the attention. And then you have bank tech companies actually supporting the incumbent retail banks to survive the digital transformation. So what we are doing is we are basically bank tech software. We're a company that we're selling software to banks. All of our product is related to subscription management. So we help the end user to make cancellation of subscriptions or improvement of subscriptions by switching providers. And of course, all of the data analysis related to keep track of your recurring expense. So integrated software product into the bank channels.
And when you talk about subscriptions, you mean things like Netflix, Fitness First, Uber, other things where I've embedded my payment credentials?
Indeed. So what you're referring now is a global trend known as the subscription economy, that consumers tend to pay for access rather than ownership. So nobody's buying CDs or DVDs anymore. We are subscribing to Spotify or Netflix, etc. And this is viable for almost every line of consumption. So in the Nordics, it's very common that you subscribe to your groceries, you subscribe to your car, instead of actually buying a car and going to the supermarket. So in Europe, the average number of subscriptions per person is 11.
And so Minna allows me to get a dashboard of all my subscriptions and then manage them through Minna?
Manage them from the bank. So we are an integrated software. You can go into your mobile banking application, you can get the dashboard, and you can also manage your subscription straight from the bank. So cancel my fitness membership and done.
And so why does the bank choose to use your platform and not sort of develop this themselves?
So I have some perspective on that one. So first of all, a lot of the subscription providers are the corporate clients of the bank. have been doing more than 160,000 cancellations today. And it will just be complicated for the bank to have all of those subscription provider relationships. So we are working in 7 different, to more than 900 different subscription providers. And to build up that infrastructure and network, so to speak, it's just way too much of a task for the bank themselves.
Okay, so moving on, APIs seem to be the tool of choice in the current environment. Perhaps you, Joachim, and the panel could explain why this is and how each of your organizations is deploying them and why. So, Joachim, do you want to start in Sweden? Why do you choose APIs?
Yeah, so I can do a quick stab on it. So in general, what open banking has made, the retail bank needs to increase their pace of innovation, right? And in many cases, the easiest way to access a third-party plus service is through APIs. And the open banking directive, the PSD2, also contains some direction that the banks need to develop within JSON or XML. So also from a regulatory perspective, the banks are forced into using modern API vectors. So we are utilizing the same toolbox that the banks is now being forced into.
Yeah, I might, if I may, just speak to, I guess, a transition and liken it to the conversation we had before about real-time payments. So we unpacked direct entry banking, and obviously, globally, it's a workhorse of any economy, right? You move high volume, high value, but you also look at it as a geek, which I am, and it's very antiquated. It's not great technology. So we all live as companies in a bulk file exchange clearing way of moving money, and we use APIs to make that behave better in a digital economy. So by that I mean we're bridging towards a real-time reality, and globally there's going to be 61 countries, I think, by 2020 with real-time payment schemes available domestically. So we're using API because it's real-time. It reads, it writes, it pushes, it pulls, and gets in a really fast way. And so we're Split are using it to make this exchange systems work better and be more relevant in a gig economy, in a subscription economy, and in a digital economy. So that's why we deploy API. We'll probably come to open banking in a bit.
Case?
I think it's Lance, and agree with the panel that a lot is about speed to market. I also, the previous panel referred to, in the older days, payments was a lot about connecting large networks with each other, and I think these days it's a lot more specific, a lot more smaller players dealing with larger players, and I think API as an underlying technology allows them to do that cheaper and faster. I think it's a big plus. It also allows people to move certain products quicker across borders, and I think it's a big benefits as well. So.
Yeah. And Chris, Joachim talked about how Minna is using open banking to help consumers with the subscription economy. And although full open banking might be a while off in Australia, what's Split planning to do in terms of making use of this data access?
I'm trying to be a bit provocative and say open banking might not open the floodgates we expect, because the tide's already rising in terms of how we access data and what we use data to do in a payment initiation environment. So we're already innovating around open banking. I think open banking is a trust thing, and that largely plays into the consumer world. Can we trust this access to data to give us better financial outcomes? So we're innovating around that, but we've also built and focused around consent to deliver security, certainty, and authority of payment. Because you can move money faster, but you'll move fraud just as fast. So in this hyper-connected, really fast-moving world, you have to apply the sensibilities of traditional banking, which is security, sensibility, and certainty around that payment, if that makes sense.
And open banking will allow you to do that?
Oh, look, yes, but it's staged. We're unsure as payments people what open banking will be and what it will look like. And the first cab off the rank will be the tier ones. Then there's a 12-month honeymoon before the tier twos are expected to come to play. we don't know what the standards will be. So the point I mean is that it's how we use data and as an outcome, not how we access it. Everyone thinks open banking is about an API, well, arguably it is, but it's also about financial outcomes, and that's how we're treating it.
In case, I mean, people might consider Fiserv as a sort of legacy player in the ecosystem. So how are APIs, which are a more modern form of usage, changing your views and activities around infrastructure?
Yeah, it really builds on what we've been saying for many, many years, that we are the great collaborator. We want to work together in the ecosystem, and we've been doing it for many, many years, and APIs are just going to make it easier for us. We work typically with large clients who run legacy, reliable backend system when it comes to card processing, core banking, switching, merchant management. The last thing I really want to do is touch that and put that at risk. So what we do is we enable those very stable platforms for them, so they can really compete on the user experience and the consumer side, typically where they want to be competitive. So for us as a company, and where we've traditionally played, it works really well, because we sort of reinforcing what we're good at, which is core, stable, reliable processing, and enabling that to others to compete where they want to compete. So we feel very good about it. We have enabled our core banking platform with an API layer. We've enabled our card management system globally with an API layer, which then allowed our customers to move functionality very quickly from one country to the other, particularly for large global issuers. Always been a big issue. APIs make that a lot easier when you work off a common platform and you're not relying on local standards. And the same for our merchant management system, used by a lot of large merchant acquirers globally. That's API enabled because they want it API enabled, and it effectively means people have very little reason to move away from the very reliable core. So it plays well to our strength, I would say, Lars.
Okay. And Joachim, during the study tour that we took to Sweden, Danske Bank was kind enough to explain how they had embedded your platform, Minna, into their banking offer, and that had helped them differentiate themselves in the market. So does being inside the bank make it easier to gain open banking permissions from consumers, or would they be just as likely to give you permission to access their accounts if you were outside the bank?
So that's a great question, and I can share some data on both perspectives. So when we launched this company, we were actually a B2C application. So any end consumer could download our standalone application and share data with us. In our standalone application, just about 80% of the customers were willing to share all transaction data. And when we are inside the bank, it's very clear with the obvious consent that data will be shared with Minna. About 90% of the customers sharing data.
So it makes them feel more secure because you're inside the banking system?
Yes, but I would also say it's insignificant. So if more than 80% already in 2019 is willing to share data to a B2C player, this is the future and the way to go. So if I open up my Spotify account, I want them to be intelligent enough and realize what music do I like. If I go into Facebook, I want the feed to be relevant. If I go into the bank, I expect the bank to know what I need. So to share data to gain convenience, that's a crucial future. So convenience is bigger than security for the majority of the customers. And we should also know that open banking comes with a lot of security layers. So for example, both the AISP and the PISP, access to accounts and payment initiation, are subject to strong customer authentication. So open banking is actually reducing the risk of card not present and SIP or fraud, since you need to ask yourself.
Okay, and presumably inside Sweden you're using the bank ID system that we heard about in our earlier panel.
all across Europe, we have another directive that is known as EIDAS, Electronic Identification and Authorization Standard. So all European member countries need to have a digital auth system.
Okay. So, although we had back in Australia, the consumer data right has passed into law, the major banks seem pretty preoccupied with compliance and remediation activities at the moment. So the timelines for open banking are likely to slip in the requirements.
Yeah.
Is this an opportunity for smaller players in the market here to jump in first? Or do they need the access to the big four data pools to make it worthwhile? Chris, what's your view on that?
I think it goes back to what we said about the trust of connectivity, but to Joachim's point, if it's valuable to a consumer or to a business, and if there's a good financial outcome, that sharing of data is easily done. Verticals where we're at scale include financial services and lending, as you can imagine, because a borrower wants to be assessed for affordability and wants a positive outcome. And I think that marries well between the two parties. So the adoption of what we call instant account verification is high. But if it's in a B2C, then obviously just for a consumption of a good or service, then there is that inherent distrust still. And the regulation towards open banking as a framework will help that. So I think we're still in the early stages, but we have a high adoption and a high applicability to certain markets where it's relevant and valuable to share your data for a good outcome.
If you're applying for a loan.
I cherry-picked that, but there are many others. Wholesale, supply chain, food services, e-commerce, where businesses want to use bank transfer because it's lowest cost routing, but you need that certainty in order to deliver a product. So even then, business to business, the adoption is high because you want that outcome and you don't want to pay the interchange rates. And that's what I think goes back to what I was talking about with direct entry. It still is a trusted workhorse. It just hasn't.
It's cheap.
It's cheap, yeah.
It's cheap.
And we like cheap. Whereas, well, I can't say we're Australian because my accent will
It
deny
works.
it.
It's cheap and it works.
In London, we're cheap. But no, it works. It's trusted, and it's this whole least cost routing, and we prefer it as a way to pay.
So, Case, do you think open banking will get adopted by the smaller players first?
I think it's already happening. I don't think the question is it. It's
Agreed.
just evident, right? The first 10, I think it was 10, right? It was recently announced. It's
ACCC,
clear
yeah.
evidence of that. So I think it's great. I see some fantastic things happening, and I think by comparison for this relatively small market dominated by 4 large banks that are not necessarily playing yet, I think we should all be feeling pretty good about what's happening. I think it gives some of the smaller business an opportunity to establish themselves, grow, and then maybe it's not a bad thing the way it's going right now, and that the larger players are going to be ready in a couple of months' time, 12, 18 months maybe. And there might be a few stronger parties for them to then work with. So I think it's a good thing. And I don't think anyone could be disappointed with the level of entrepreneurial opportunities I see smaller players doing for open banking. It's still, a lot of markets talk about it. I think Australia is an attractive market now, given the mature economy, the language and all of that. So I think maybe the slowness of the larger players, I don't think it's holding anyone back right now in my observation.
And your point, Lance, about the Swedish change being consumer-led, and there was lack of regulation. We're learning from that here, and so we're using regulation as a trigger, but also we got a keen eye on consumer adoption as well. And you marry the two, maybe we're learning from mistakes or we're learning from learnings, but we've got that historical data now to back how we're approaching it.
And just going back to the APIs, is there a cost to deploying APIs?
It's all free.
They're all free.
It's all free.
They all seem to be free. Right? So if building them, deploying them costs money, how do you recoup that from users?
He was always going to say they're all free and they should be free, but in our world they're clearly not free and they do cost a shitload of money to develop
Yep.
and implement. So let's not fool ourselves. There is a cost to all of this. It's ultimately faster and easier enablement, so there's cost savings there, but we certainly run models where we charge our clients for every API call. I think the models are changing. Even in B2B, it's increasingly more about subscription than the traditional payment model where you do a transaction, I'll charge you. But we definitely charge for API access, and I think we should. I think that's actually very healthy because people are benefiting from it ultimately, and therefore there's a revenue stream that needs to be shared amongst everyone. But the models are changing, but I grew up in a world where free was never seen as great value, so I think charging is a good thing, Nance.
Right. And Joaquin, what do you do over there in Scandinavia? Do you charge for your API calls?
So none of the retail banks are allowed to charge. So PSD2 is a mandatory directive that is free to use, but it's quite limited. So I can access transaction data of any bank in Europe, but most of the banks have developed a second tier of APIs that are quite enriched. So if you would have more additional data that the banks sits on, you can pay to use premium API.
I might also comment on that, and I jest with a flippant freebie.
Yeah.
It's infrastructure and actual cost of building, but let's look at the other side of the coin. Think less cost. A lot of the banks we work with are struggling with how to commercialize open banking. You could consider API calls to be messages, right? And if messages have a value attached to them, so if you're creating a consent, amending a consent, or changing an agreement between two parties, it's very easy to associate a value proposition and therefore a cost to it. So it really depends what you're doing with your data, and it's right in Europe that there's a free subset to achieve that adoption, but there's premium services, and ultimately that's what we take to market, which is easily commoditized. But I just think we're a bit uncomfortable moving out of a payment world into a messaging world, and that's what a lot of people may struggle with. Lance, you don't believe me. What have I said?
I'm just thinking of the parallel in the telecom space where you used to pay for every call and now you get all the calls you want for a monthly subscription. So there's been a shift, as Kay said,
good point.
from per transaction
That's clearly happening,
to a monthly fee.
even in the B2B environment, yeah.
It's just new in the payments side of things. Questions from the audience for the panel? John.
I'd like, seeing as we're all technology companies here, I'd like to just get a feel what you see as the opportunity once you've built the API or have the technology in place in one location. How rapidly is it scalable across borders into other markets, other jurisdictions, from a regulatory and a technology point of view?
I'm not sure whether you heard that, Joaquin. John's question was, once you've built the API infrastructure in one location, how easy is it to scale it cross-border into multiple locations? And you've done that, I think, at Minute.
Yeah, so we can answer it from two perspectives. Are we talking about the APIs that we expose or the APIs that the banks expose?
More to the bank.
The ones that the bank exposes?
Yeah.
So is there standardization?
So, most of the banks within Europe are still domestic. There are a few big players that are on several markets, but all in all, they are following the same standard. So I would say that once we have understanding of how to work with the APIs that's described in the Open Banking Directive, it's quite easy for us to integrate with APIs across all of the European countries.
Hughes?
Yeah.
Well, my immediate thought is technology is easily replicable, and that's one of the benefits, that it can be amplified easy. You can use the same technology stack in many markets. The challenge specifically around data and payments is compliance and regulatory compliance. So in different countries it can be entirely different. We've recently deep dove into 61 countries to look at what electronic mandate requirements are in each of those countries, and they differ greatly. Some are still paper, some are electronic, some are real-time, and so technology is easy to amplify and expedite and take global, but it's more about data sovereignty, compliance, regulation, and that makes it harder in the payments space and data space to move faster. That's the challenge we found, and we've got various ways of overcoming it.
Yeah, I think for us, the easy answer is to say it's easy. It's not, right? And we've been in business for a long time. We have clients that have used our platform for a long time, and there's typically two things that happen. They customize the hell out of it over time, and you've got unique market specific requirements, even for some of the global schemes. There's a level of local market customization that you always have to be sort of dealing with. In a sort of more ignoring customers that used it for a long time, if you enable a new customer, all our core platforms are single source code. You build an API layer, you can pretty quickly go from one market to the other. But the reality is that a lot of clients have used platforms to customize it to their needs or to the market needs. Certainly a lot easier when you have a clean sheet to work from.
And what's the panel's view about standardization of APIs? Does that help or hinder the competitive landscape if everyone is working to the same standard?
Yeah.
Can I take a shot?
Yeah.
So I think we need to zoom out from the technological part, that is the APIs, and focus on the customer-centric approach. So what are the actual user values that is created through consumption of this technology? So just to answer your previous question, will the smaller banks take advantage of that? Looking at Europe, the ones who really took advantage are the challengers. The Revoluts, the Monzos, so we have challenger banks that are now surpassing 3 million customers. And they have been able to reach this huge customer adoption simply by building technology or user value on the data. So to have access to data is just a key ingredient, but what do you do with the data? And that is the most important question for the banks. Don't monetize the API. Think about what you can build, what product can you offer based on the API.
And the issue of standardization, does that help or hinder the competition?
It needs to be standardized. So since Europe is very fragmented, you have a lot of small markets. If you have different standards, you can never scale a technology.
But that's different standards across countries. I think the topic should there be standards or not. If you have no standards, you don't have difference between countries. You just got differences everywhere. Which creates a competitive layer, right? So my view on this is that I think you got to do both, right? If you continue to standardize everything, you start losing the competitive edge that we always had. And I think payments has, in the recent years, somehow, and I'm simplifying it, but in my view, really moved towards we all work together, we all like each other, and no one should pay for anything. And that's just not a good thing, right? And shouldn't bring it too close home to the NPP, but my view on the NPP is that the early participants have done a fantastic job in investing in an infrastructure, and they've got to get something out of that. You cannot just give it for free to the next person that makes a bit of noise. So that's just one example, but that happens a lot. And so to me, it's a bit more balanced. I think it'd be really good if we move increasingly away from domestic standards. And I think that Joachim is calling out as well. It makes it a lot harder for people to move their business across territories if you have all these different domestic standards. And I think Australia generally on the right track to not be too caught up on the Australian-only standards anymore. So I think it's going to be a bit of a balancing act. I like your view on some of it for free to enable, and maybe you need to standardize some of it to get traction.
Yeah.
But then there's got to be a competitive edge to
I think we're just
who
both.
works better with who, right?
We're just young guys with a crazy dream. But what I would
You're talking to him.
but
It's a long time, yeah.
to comment on that though, it's a consulting thing, but you call it freedom within a framework. So we subscribe to, I think, the global standard around payments is ISO 222. So you've got even large messaging companies pivoting towards that, large merchant companies pivoting towards that. The unpredictability of how people build into it creates competition and frustration and friction. And arguably that's healthy because it creates a competitive environment. But ultimately, I believe, I do have a dream, it is collaboration. This is a once in a lifetime chance for banks to win here through collaboration with fintechs rather than just disrupt. So there's something happening here that's quite special and quite different.
Okay.
You are a dreamer.
I've run out of time, but I just a final word from each of the panelists. Who are going to be the winners and losers out of open banking and APIs? Joachim?
Yeah, so I have a very firm bet on that one. So I think that the incumbent banks have preferences already have the customers, and customers are reluctant to change. So if the banks can provide the new expected functionality and value, the banks will retain the customer. And I think retain is the key word here, because if the banks don't act, they will lose their customers to the new challengers.
Okay.
So banks have the chance and the opportunity, but they need to act on it.
Chris?
What he said, essentially, but ultimately, that end user, that consumer will win if there's a better financial outcome. And the banks here have a window, a very small one, to really get on top of this. And if they don't, then they will be the losers. So it can be radically changed, or we can all go along this ride, which just creates a better payment service. How many payment systems does one world need, really?
Not too many.
Not too many.
Okay.
I just realised maybe I have a dream. I think if the retail and business customers really win out of this, I think that's a good thing, because what it will do is that, and we're talking about payments here, that payments will hopefully become a lot less of a commoditized offering, where we generally compete on price and price only. And I don't think for most of us in the room that is a very sustainable model. It doesn't allow us to continue to innovate, and it doesn't matter if you are a new player, a disruption player, or a legacy player, right? The reality is a lot of these cool disruption players are not making any money, and still seen by many dreamers as a very cool thing. Somehow it disappeared and you're going to make money out of a business, but the reality is not sustainable. So I think if the retail customers, the business customers truly start seeing value of open banking data, all of that, they're willing to pay for that. And I think a lot of us in the room can therefore continue to do what we do. All of that in a context of a world that is increasingly asking us to invest more in cybersecurity and all of that, right? We talked about in the previous panel, that's a reality that's there. It's not going to disappear. It's likely only to get worse if we like it or not, and we're going to continue to invest in that. And I think as an industry, we're going to have a little bit of margin to play with to actually do that.
Please join me in thanking the panel for the discussion. I'm now going to hand the floor back to Camilla.
How good was that?
And thank you, Joachim. We'll allow you to get on with your day now.
Tack så mycket.
Thank you very much, and enjoy the evening. Next time I'll be outside.
Okay, thanks, bye.
So there are many reasons why we love running those EPA events, and that was just a good example of it. It's always fact-rich, it's always new, it's passion, and it's a little bit of banter and laughter. So thank you very much to the panels and to Lance. At EPA we have a tradition that we don't give flowers or wine or tokens. We give $45 to UNICEF to improve lives everywhere for children. And I have two announcements. First, who is going to take home the world's first payments cup from Frank Green?
EPA branded.
EPA branded. Turn around.
forgot to put
I'm going to start with us. Drum rolls. I'm looking away. Camilla,
Yeah.
Jennings. I must have been drawn to that. Then also, I would like to announce that our next study tour in 2020 is going to go to Tel Aviv and Israel on the topic of cybersecurity and AML. It will be in October, and in the email that we're going to follow up after tonight, there will be a link if you want to put your interest down. What we found in Sweden was that it needs to be a small group. That's when you really get interaction and key facts and partnerships are built. So it will be a small group of 15 people, and that's across all our countries and all our members. So I think and hope the spots will go quickly. And in the room we have quite a few of the delegates from our Sweden tour. Can you put your hands up? There, that's one. So if you have any questions about what actually happened in Sweden, you can go and ask them. Otherwise, I invite you to have a few more drinks and a bit more food. And thank you very much.